my soul.
Hello Austin, this is Randi White and I'm your local Austin Realtor. Today's video is going to tackle those interest rates that we see are ticking upwards. Don't worry, you don't need to be afraid of them. They're not skyrocketing off. We just need to be informed and educated, which is what I'm here to do. So if you can do me a favor and hit subscribe on my channel if you like the information that I give. I like to do weekly videos both about the real estate market and about tooling around Austin. So let's get started about these interest rates. So no doubt about it, we are seeing some movement on those interest rates. Now my video today is not to tell you that the sky is falling or that the interest rates are shooting up. No. I am here today to just educate you so that you can feel informed and prepared for what those interest rates are exactly doing. So first I have a quote from Ollie Wolf. The single biggest risk to housing is rising mortgage rates. It's a real possibility the next year and it could bring prices down. Further, other economic, financial, and confidence challenges could also result in a drop or flattening of home prices. But a drop or flattening in home prices is a far cry from the crash we saw during the Great Recession. So Ollie Wolf is saying that the biggest issue for this kind of frenzied market that we're in is these rising interest rates. And that's very true because it's going to start to become expensive, more expensive for people to borrow. In the first few weeks of October, the average 30-year fixed rate jumped over 3%. So it's kind of nuts that we're sitting here talking about being in this rising interest rate environment whenever the average 30-year fixed is still just over 3% because that's still awesome. But anyway, so a few weeks into October, Freddie Mac reported in their weekly survey that their average rate was at 3.01%. And this jumped up after they started receiving indications from the Fed saying, hey, you know, we're going to start to taper soon. Chief economist at Freddie Mac, Sam Cater, said this: many factors led to this increase, including the Federal Reserve communicating that it will taper its support of the capital markets, the broadening of inflation, and emerging energy supply shortages, which compound other labor and materials shortages. So what the issue is here is that the economy is recovering, but it's not recovering as quickly as they would like to see. And so when the Fed makes a statement like, hey, we're going to start to taper back what we're buying in the mortgage market, that will absolutely start to cause those interest rates to go up. So a really important thing to point out here is that we are in a good environment right now, right? So it is going to start to become more expensive to buy a home with the home prices appreciating into next year, like we talked about last week in my market update, now coupled with the rising interest rates, making it more expensive to purchase. But nobody is calling for a sharp spike in interest rates. Let's take a look at that. So here we have the projections from Freddie Mac, Fannie Mae, MBA, and NAR. And you can see that towards the middle of next year and kind of going into the third quarter, we're going to be reaching around 3.5%. Not too bad, right? I mean, we're just over 3% right now. And then if we want a visual for this, we have the Freddie Mac visual, which shows the interest rates from the past couple of years and into the projections of the future. So you can see that it really drops there during the pandemic. Those got those sweet 2.8, interest rates. And, we're starting to inch our way back up into, possibly like maybe 3.7 by the third quarter of 2022. And so I'm definitely not here saying like this is certainly what the interest rates are going to be, right? But I'm feeling pretty confident that they're not going to be all the way up to 4%, and they're probably not going to stick around at the 3.25%. So kind of in this middle space of 3.5 plus a little minus a little. And then I'm definitely confident though that they are going to begin to rise. So I've got this neat infographic here that allows me to put in a purchase price that I want to examine, and then it tells me what the different interest rates do to that loan amount once applied to it. So in this example, I decided to use a $400,000 mortgage. And if you take a look at the 2 3/4 interest rate, which is the sweet spot that we've had the last year or so, you can see that that mortgage payment would be $1,633. Then if you kind of bump up to 3%, now we're at a mortgage payment of $1,686. So not devastating, but a little bit of an increase. Now, if the interest rates start knocking on the door of 4% in the next year, I mean, it starts making it, you're affording a significantly less amount of a home than you could before. So I am not here to encourage anybody to do something that they are not ready to do. That is not the type of realtor that I am. But I am here to make sure that everybody understands what the fluctuating interest rates coupled with the expected price appreciation coming our way does do to your purchasing power in case that changes what your plans would be as far as planning for trying to be a homeowner. All right, guys, I'm going to wrap up this video, but I do have kind of one more message to deliver, and I want to start off with this quote from DS News, which I thought was very good. Homeownership is one of the fundamental keys to accumulating wealth in America, hence why it has been integrally linked to achieving the American dream. Not only can owning a home provide a roof over your head and a secure place to live, but because mortgage payments generally remain fixed while rents may rise over time, a home can be a very effective hedge against inflation. Now, there's a topic being discussed a lot right now, right? Inflation. Owning a home is a very effective hedge against inflation because your payment is fixed. The quote goes on to say, together, these features can give homeowners an enormous advantage over renters when it comes to accumulating wealth. So homeownership provides this opportunity of, not only giving the basic need of shelter, but it also provides this opportunity to allow people to generate wealth all across the country. And I know that a big concern for most people is, well, I don't want to buy right now because I don't want to buy at the top of the market. And I just want to make sure that people are realizing that forecasters are not calling for a depreciation in prices. What they're calling for is a deceleration of the rate at which home prices are appreciating at. So the home prices are going to continue to go up in the next 3 to 5 years. That's what they're forecasting, just at a slower pace than what we've been seeing in this, crazy year that we had. The home price expectation survey just came out, and it shows that a home purchase this year at $350,000 stands to potentially gain just over $111,000 in appreciation over the next 5 years. And so the people out there that are saying that they don't want to buy at the top of the market, I feel like they're missing this critical piece, right? And the reason that this is happening is because we are severely underbuilt in housing, right? That's what we've been talking about in my videos all year long, undersupplied. And that problem is not being fixed overnight. All right, guys, that does it for my quick little video about interest rates. Just wanted to give you some perspective of what to expect. So they are slightly trending upwards, but the sky is not falling. We do not need to be terrified of this situation. We just need to be a little quick on our feet if you are intending to buy in the next year. So if that is you, please send me a text or give me a call at the phone number listed below. You can also reach me at my website and submit an inquiry there. Also, if you like this information I'm giving to you guys every week, then please subscribe to my channel so that you can be notified every week when I release a video either about the real estate market or about tooling around Austin. It's a pleasure doing these videos for you guys, and I will see you next week. Thank you.
Well, I'm going down to Austin, Texas. I'm going down to save my soul.